I am Umair Abbas, Deputy Director, Student Affairs, Minhaj University, Lahore. We are into day 2. We are into second of the 3 technical sessions, and I will be coordinating this session. The theme of the session is Islamic political economy in the era. Before we move forward, let me introduce you panelists who have joined us for this session. We have with us Mr. Mohammad Islam Ahmed as our session chair. Mr. Mohammad Islam Ahmed has over 30 years of diversified experience of working in various departments of State Bank of Pakistan, and currently he is serving as Senior Joint Director, Head of Policy Division, Islamic Banking Department, State Bank of Pakistan. We are honored to have with us Mr. Ijlal Alvi Sahab. He will be delivering the keynote speech. He has over 3 decades of experience of working with regional and international financial institutions. And currently he is serving as CEO and Secretary to Board, International Islamic Financial Market, Bahrain. In this session, we will be having 4 presentations. We have been joined by Dr. Khalil Mohammed. He is from Bahria University, Islamabad. Mr. Adebayo Mohammad Ojuolape, the Nigerian guy. He will be representing University Science Malaysia. We have with us Dr. Umar Farooq Saeed. He is an MBBS by profession, and he is representing Minhaj University, Lahore. And last but not least, Dr. Kaisar Bilal is also with us. He is from Kohat University of Science and Technology. Well, for our audience, if you do have any questions, please do let us know by simply clicking at Q&A tab. The questions should be precise and to the point. We'll try to answer as many as we can, but obviously it depends upon the availability of the time. And please do nominate the person you want to answer your question. So ladies and gentlemen, time for the keynote speech. May I request Honorable Mr. Ijlal Alvi Sahab to deliver the keynote speech.
Bismillahirrahmanirrahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Distinguished guests, ladies and gentlemen, it's indeed honor and pleasure to be participating in this 4th World Economics and Finance Conference. And I'm honored to be invited to give a brief keynote on one of the areas which I think is emerging now in terms of the Islamic finance. And my short speech today is on the Islamic banking and capital markets. So I'm not going to involve other aspects of Islamic finance in general. COVID-19 pandemic has, as everybody aware, had triggered major uncertainties in global financial markets. And this is often we hear about this. At the same time, the norms of people, how we work, how things are done, and the environment is rapidly changing. We have seen the use of technology as one of the emerging area, which in some cases we have made headway, and I'll briefly mention, and Islamic banking, and in some ways it has also, we have to cover a lot of ground. Keeping in mind the theme of this conference, so I'm going to talk on a specific subject of fintech and about, since IIFM is about standardization of global documentation, Islamic and product confirmation. So my speech today is going to cover one aspect of that. Alhamdulillah, Islamic finance has developed from novelty to become an increasingly integrated and internationalized financial system. Islamic finance continues to grow rapidly, transcending beyond geographical boundaries, as we know, and becoming more entrenched in global financial system. At the same time, if you look at it in terms of the digitization and simply technology-based automation that we are required, there is an area which we need to see. One of the things which we have noticed in terms of the banking side, that we have now banks in most of the jurisdiction now, Islamic banks in particular I'm talking about, and that's our area of our interest, is offering now fully automated branchless services. For example, now the banks are able to, or even low wagers can open account with a bank without going to the branch. They can do normal banking transactions, for example, withdrawing money or taking some deposits or placing deposits. So this is, and also in the household also we have seen, especially rapidly in the last 1 year, if you look at it, where I'm based in Bahrain and GCC in general, and other Far Eastern countries, Pakistan, Bangladesh, and all, we see this trend is emerging in terms of the banking side. We have seen now, this development taking place in terms of the ease of transaction and also reducing the cost. One area which we sort of see where still there is a room for us to ponder on, and this conference is about research papers, and also academics also are involved. So for us to see, as we go forward, is to see what can be done in terms of digitization. IIFM, last year, we signed up along with the 6 other international bodies as a co-signatory to the digital future of the financial services industry, and also to get the support of, we say, multilateral regulators like Basel Committee, Financial Stability Board, or ISCO on the capital market side. And we are sort of trying to see, and of course, it's the industry-driven thing, so it's not one entity can take this role, but we want to see how the contract itself. So one element of the contract itself is digitization. So that is you digitize your contract. So that's, I think, is something easily can be understood. And the one which is we need to see is the smart contracts. So you may have heard this word, what the smart contract is. And smart contract is, in simple term, is a codes-based individual contracts that automatically execute the desired actions when certain actions are met. So this is, in general terms, the definition we see. Previously, if you see, when things were not even developed in the conventional world and they were thinking about it, we saw in 1994, the definition by Nick Szabo is a set of promises specified in digital form, including protocols within which the parties perform on other promises. So it's involves, you can see the contracts, and also this term, if you see this definition, it's a little vague. Then in 2016, there's a Clark, Bakshi and Brain. They define smart contract as an agreement whose execution is both automatable and enforceable. Automatable by computer, although some parts may require human input and control. Enforceable by either legal enforcements of rights and obligations or tamper-proof execution. So here you can see it involves, when you talk about the smart contracts, that there is an automation aspect. And when we look at the contract itself, you'll find, let's say, a Murahaba contract, or a contract which involve Murahabaha plus, let's say, Waad, which is promises, how that will work. So not the entire contract would be, you'll be aiming to automate. It will be basically certain actions which are operational nature, and those are the one which will be you will be need to automate. So operationally, certain calculations, certain things can be done. So you basically make it more efficient. So it's not a disruptive nature, this automation, but it is of creating more efficiency. At the same time, we have to see, and also in the conventional world also, although the industry is more developed, there is a work how the legally things will work, because enforceability of contracts, especially when we are talking about cross-border, jurisdiction level also is one case, which you have legislations and various things, but internationally, when these kind of smart contract develop, one has to see how the court system will work. So how legislation and certain things will be done. So this is all for us, and I'm leaving this sort of point for all the listeners and all the fellow colleagues to see what else can be done in terms of the research, in terms of setting up the law, the required law, which is very important if you have any transactions, especially if you have cross-border, how, foreign contract, let's say if in Pakistan, it's banks does outside in GCC, let's say, or in Malaysia or Far East or Indonesia, how those contracts will be viewed. So where, so these are the things for us to see. When you sort of look at it in terms of example, which we can see, one could be that there is, sukuk, as we know, which instrument which is quite widely used and everybody, I'm sure, is very well aware of. So how, the sukuk we can automate in terms of the smart contract. So perhaps you can, make the coupon, payment calculation, this disbursement, those element in terms of efficiency, you automate. So you remove, the intervention of human, but human always remains. So I don't see that when you automate, the jobs will be lost, but they will be. So it will be more on the time of, how things will be when they executed, whether they're executed correctly, if there's certain just decision to be made, naturally those will be all have to human intervention will remain there, but it will definitely speed up. Of course, errors would be less, and workflow and efficiency it will create. It can also be done through distributed ledgers, which we talk about, and generally you are aware. So that is also can be done with distributed ledgers, these smart contracts, or without also. So this is one thing which we also see. We have seen in terms of some development, because there is still work in progress when we come into this smart contracts, but some development has started taking place, not from the start, from the point of view of smart contract. I think still there is some way to go in this one, and more consultation, which IIFM also did previously, and some awareness in terms of our seminars we organized, but consultation level and all, I think will start in coming 1 or 2 years, inshallah, and part of our strategic plan also to look at that. But what we have seen is for example, I can give where the automation is basically tried and used. One is in terms of sukuk, platform where it is can be privately placed. So you remove the lead arrangers and all. So that exercise has been tested in an entity based in Abu Dhabi, or in UAE rather, under Dubai Financial Services Authority. So there's an entity tried this, some pilot where the sukuk can be efficiently brought to the market, so primary market. In that respect, there is, when you have sukuk, there is a documentation, as everybody is aware, that also required time and efficiency. So IIFM has started issuing documentation for sukuk. We have done the Ijara sukuk documentation, which is available on our website, and we are now doing sukuk al-mudaraba, tier 1, so which is meeting the capital requirement on institutions, on quasi equity type sukuks, which are quite commonly used now by various institutions in most of the jurisdictions which are active in Islamic finance. So this is one attempt has been made, and some tests were done. So because of, I think, COVID-19, we didn't see, yet much progress on that one, but that's a privately initiated sort of attempt, which is, I think, will eventually, you'll see some, level of more efficiency in the sukuk market. Other one, which was also related to sukuk, but also from microfinance and cooperative nature out of Indonesia. So this was a Bina Ummah. They have raised a small amount for, in terms of rupiah, it's 710 million Indonesian rupiah, but in terms of $50,000, but they have placed this primary market issuance for small investors through blockchain and smart sukuk platform by Blossom. So these are, I think, good sort of development which we see are taking place in terms of automation in the capital market. So I mentioned about the banking side, progress has been made, but capital market, now we see, these kind of attempts have been made, which will make it more efficient in terms of issuance of sukuk. One of the things you see in sukuk in particular, that in the jurisdictions, especially in COVID-19, we see jurisdictions issuing a number of sukuks. But in terms of the corporates, for most of, barring few jurisdictions like Malaysia, which is well established, and they have a well established corporate market, we don't see corporate even in Pakistan, other places taking that much role. I think these kind of things, when we are more sort of developed, that will also help the capital market and sukuk being the primary instrument used in the capital market. So this is something which I wanted to share on the smart contract. I would like to sort of, before I close, I want to mention about the social sort of responsibility element and what can be done for social development and use of capital market instrument. So we have seen now sukuk in the last 3-4 years has been issued by certain countries, especially Far East, Malaysia, also Indonesia, and also certain other countries in GCC, which are targeted towards either school or social development programs or immunization program. Also, World Bank entity did that. And I think this is something in terms of the role of Islamic capital market in the social development side is something which we have seen that is, attempts are being made, but there is still, in my humble opinion, a lot of room for us to do. Same side we have seen now, although it's a natural fit when you look at the socially responsible investments or sukuk, or you see green sukuk, for example. That is also something which we are seeing that has been developed, which will help, the social sort of element of Islamic finance, which is entrenched in Islamic banking and finance. So this is something, in my view, these are the few areas which I thought I will shed some light on, and for us to basically take it, I hope, from this short speech, some points, and for us to work further on this. And in conclusion, I would like to say from the beginning, Islam has viewed commercial activity not only as divine, but also a necessary aspect of human life, a source of social gratification and psychological pleasure. Such activity is considered necessary to establish an equilibrium between one's individuality and social life. The Quran instructs Muslims to persistently work whenever and wherever possible, disperse through the land and seek of the bounty of God, Allah Almighty, and God has permitted trade and forbidden usury. And this is our main area which we basically work on. With this note, I will end my speech. I hope I have been able to convey clearly some of the theme and some of the areas for us to do more research, to take part in this development. Jazakallah khair. Assalamu alaikum wa rahmatullahi wa barakatuh. So over to the moderator, inshallah.
Thank you very much, sir. Ladies and gentlemen, it was Mr. Ijlal Alvi, and who was delivering the keynote speech. Well, time for the presentations now. And before we begin, let me reiterate that all the presenters are requested to wind up their presentations in their allotted time. So first of all, I would like to invite Dr. Khalil Mohammed to present his paper. He will be presenting on the bank capital channel of monetary policy, empirical evidence from Islamic and conventional banks. Dr. Khalil Mohammed.
نحمده ونصلي على رسوله الكريم أما بعد فأعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم. Respected session chair, fellow speakers, ladies and gentlemen, good afternoon. It gives me great pleasure to be talking to you guys today and sharing some of my research with you. So with like all researchers, this research also started with this nagging question asked to me by one of my professors of monetary policy in Japan. And this question basically was, is Islamic banking different from conventional banking? And he stressed on play of words aside. So play of words aside, is Islamic banking different from conventional banking at all? Because if you look at the data regarding Islamic banking, you find that Islamic banking and Islamic financial infrastructure has experienced exponential growth, but specifically this growth has been limited to countries where there has been a large population of Muslims present. And so the question is that if Islamic Bank does indeed provide value to us, why aren't other countries, the West, adopting Islamic banking as quickly as we are? Why aren't they actually seeing any benefit to that? And when my professor asked me this question, obviously being a staunch Muslim, your response is, look, Islamic banking is better than conventional banking. It offers you riba-free banking. We are talking about asset-based transactions. But as a social scientist, you have to back everything with empirical evidence. And so this is how this process of research in reference to this study started. In the study, basically what I'm trying to do is I'm testing this theory by Hewell, 2007, in which he proposes that there is a capital channel of monetary policy transmission. Monetary policy affects the bank's capital, which then impacts the lending of banks. And then from lending, this monetary policy gets transmitted into the economy. And in order to explain this, he comes up with this simulation in which he comes up with a lending function of conventional banks. And the theory basically suggests that excess capital has a non-linear relationship with new lending of banks. And banks basically exhibit something called a forward-looking behavior in which when the bank's capital gets closer to the lower bound capital requirements, banks refrain from lending as much. Besides this, the theory talks about how new lending is impacted by interest rates and by the size of banks as well. In the study, what we're trying to do is we're trying to kind of figure out whether conventional banks lending function actually does obey this hypothesis or not. Is it actually non-linear with respect to excess capital or not? And when we're talking about non-linearity, we're talking about the fact that new lending and excess capital is directly related, but increasing at a decreasing rate. And in order to test this, what we want to do is we want to figure out whether the function is non-linear at all. And then we want to compare it with Islamic banks and see that the cost plus products that they have, are they exhibiting similar behavior as well? Do they have a similar functional form when you compare it with conventional lending or not? Because till very recently, we know that the major portion of the financing mix of Islamic banks used to be these cost plus products. And that's why in a lot of literature, you read about the fact that Islamic banks don't follow the theoretical model. So we want to compare whether the cost plus products of Islamic banking also exhibit this nonlinear behavior or not. So we start off by using a quadratic form of equation to test the nonlinearity. And basically what we're trying to see is whether the beta coefficient of the square term is significant with or not. And the estimation technique that we're using is difference GMM. The data is an unbalanced panel. A dependent variable are basically new loans that the bank gives. We're using a lag term over here, data from 25 countries that have Islamic banking in them is used. And these are countries from the Middle East, Africa, and Asia. we're controlling for inflation and GDP, and we're also controlling for market competition in the model as well. Besides this, the model controls for country-specific effects and time-specific effects as well. What we've found out after doing this GMM, difference GMM estimation is that conventional banks do in fact have a non-linear lending function. They do respond non-linearly to this, to excess capital. New lending exhibits this non-linear behavior. The squared term was found to be significant in our estimation results. And when we used an interaction term to see how Islamic banks behaved in comparison to conventional banks, we found out that Islamic banks were in fact also exhibiting this non-linearity. However, this non-linearity in the case of Islamic banks was in fact less than Islamic banks. What this is really implying for the layman to understand is that when your bank's capital position is close to the lower bound, they will be decreasing their new lending. And this bank channel of monetary policy transmission basically says that bank capital is going to affect the bank's lending and therefore the whole economy. And that's the monetary policy transmission channel. And if your lending function in the case, as we found out in our results, estimation results, that it's less nonlinear in the case of Islamic banks. If it's less nonlinear, that would imply, therefore, that this monetary policy channel, the bank capital monetary policy channel, weakens when you include Islamic banks into the mix. Although we need to understand that there are a lot of studies available that talk about how Islamic banks have outperformed conventional banks during crisis because of the fact that they have better capital. Since they're better capitalized, there's also empirical evidence that suggests that they have somehow gotten conventional banks to keep higher capital positions as well. But from what we found in our study is that empirical evidence shows that bank capital causes nonlinearity in the lending function. And this is evidence of the existence of a bank capital channel of monetary policy transmission. This we found evidence for this forward-looking behavior of banks when they're cutting down on their lending, when their capital positions are close to this minimum requirement. Implications, therefore, eventually are that this means that having Islamic banks in your banking mix may improve the stability of the system, but might weaken the capital channel of monetary policy transmission. Besides, this was the main finding of the study. Besides this, we found that size of the banks also impacts lending the banks, and interest, however, we were not able to find a significant on new lending of banks. There were some kind of limitations with the study that we've done. In the theory, the paper talks about excess capital. We used capital to asset ratios rather than risk-weighted capital asset ratio. Risk-weighted capital ratios rather than we used just capital ratios rather than risk-weighted capital ratios. And the time horizon was also kind of only from 2002 to 2012 because of data restriction. For future research, option would be to look at whether musharaka and diminishing musharaka products also exhibit a similar non-linear behavior or not. That's it from my end. Thank you very much for your time. I look forward to your valuable feedback. Thank you very much. Over to
Well, thank you very much, Brother Khalilullah Mohammed. Well, efficient time management is key to success, and you really hit the bullseye in terms of your calculations with the allotted time. Well, our next presenter is Mr. Adebayo Muhammad Ojuolape from University of Ilorin, Nigeria, and he will be presenting his paper on the nexus between Islamic public finance and economic development in Nigeria. So, Brother Adebayo Muhammad Ojuolape. Brother Adebayo, may I request you to please adjust your camera?
Okay, can you see my screen now?
Yeah, looks good.
Okay. Sorry, trying to. Okay. Good afternoon, everyone. Good afternoon, the panels and the hosts and my fellow presenters. My name is Adebayo Mohammed from University of Ilorin. And I'll be presenting the paper, The Nexus Between Islamic Public Finance and Economic Growth in Nigeria. First, the presentation of the abstract. The study examined the short-term relationship between Islamic public finance and economic growth from 2012 to 2019 in Nigeria. And the study also examined the bi-directional relationship between Islamic public finance development and economic growth. The study used the ADF and KPSS to test for unit root, while we used the bound test to test for co-integration before using the ARDL, which was for the purpose of checking for the relationship and short-run effect. And the granular causality was used to check the bi-directional relationship between the two. The results show that Islamic public finance positively impacts economic growth and development in Nigeria during the study period, even though the impact is very small. And given the Nigerian state's peculiarity towards Islamic financing. However, the causality shows that the absence of a bi-directional relationship exists in the Islamic finance and economic growth in Nigeria, and this may be attributed to the lack of political will in the country. The study recommends that the Central Bank of Nigeria should provide a favorable environment for Islamic public finance to grow, and there should be a kind of sensitization for the people to know the advantages of Islamic finance and why it should be allowed to grow in the economy. Introduction. It has been affirmed by several studies that financial sector actually contributes to the growth of an economy, and the role of financial sector, amongst others, includes raising of funds for productive purposes, overseeing the company and smooth running of corporate governance, provision of adequate information on judicial utilization of funds, transferring and managing technology, and diversification of risks. But consequently, the Islamic financial sector emerges alongside the conventional financial sector due to its principle of profit sharing and risk sharing. What this slide tells us that when you look at the Islamic Sharia, it goes against the use of interest or the collection of interest or payment of interest. So Islamic finance, on the other hand, enables us to deal in the Sharia way by sharing profit and loss equally and avoiding interest, which we refer to as riba and can be termed as something that is haram in Islam. And in Nigeria, the growth of Islamic finance assets has been fast over the years, and it continues to experience an enhancement in financing. And this has been backed by several studies. And numerous studies also examine the financial growth nexus in Islamic public finance and economic growth. However, very few studies have been done on this in Nigeria, and therefore we have these two research questions in this study. One, does Islamic public finance stimulate real economic growth in Nigeria? And two, what is the bidirectional relationship between Islamic public finance and economic growth in Nigeria? And the research objectives are therefore to examine whether public finance stimulates economic growth in Nigeria, and to determine the bidirectional relationship between Islamic public finance and economic growth in the country. There exist 4 different types of hypotheses, which are supply leading hypothesis, demand following hypothesis, the feedback hypothesis, and the neutrality hypothesis. While the supply leading hypothesis and demand following hypothesis is a one-way movement, because the supply leading hypothesis talks about how the Islamic public finance leads to an improvement in economic growth, but the demand following is now is talking about how the Islamic public finance hopes to get a growth through the improvement in economic growth. That is, how economic growth boosts Islamic public finance or public finance as a whole. Whereas when we talk about the feedback hypothesis, this is talking about the bi-directional relationship, how both affect one another, how public finance is going to contribute to economic growth, and how economic growth, in the other hand, also contribute to the improvement in public finance. And the fourth, which is the neutrality hypothesis, shows a kind of mutually exclusive situation where an improvement in public finance has no effect on the economic growth, and economic growth also is independent of the public finance. So there is really no link between both of them. But on the methodology, we try to examine the impact of Islamic public finance on Nigeria's economic growth, like I said earlier, using quarterly data from 2012 to 2019, because Islamic finance started being in Nigeria around that 2012. That's when we started being knowing more about Islamic public finance in the country. And the GDP in the model stands for gross domestic product, while the TD stands for total deposit, and TF stands for the total finance through Islamic banking. The augmented degree fuller was used to test for stationarity with KPSS in order to complement the weaknesses of one another. And this leads to the mixture of the I0 and I1 of underlying regressors. Therefore, the proper co-integration technique will be to use the hierarchical co-integration bound test of Professor Nashin 2001. However, the tests show no existence of co-integration among the variables in the long run, which shows that the only short run of the model is necessary. Hence, the study uses a RGM model for objective 1, and we use the Granger causality for objective 2. And in the trend analysis showed in the real paper, it shows that there is an increasing rate movement in all the variables over the years. There's an upsurge of all the variables. Here is the model for the studies, and it shows that data for these studies were retrieved from the CBN Statistical Bulletin. And from the results gotten, of the model is significant and suggests that the higher the deposit in Islamic banking, the more the effect on economic growth. And for a unit increase in total deposit, economic growth rises by about 0.007 units. Also, Islamic banking total finance in Nigeria are also expected, and it shows expected result, and it was significant. And it shows that when there's an increase in Islamic banking's total financing, the more the impact on the economy. With a unit increase in Islamic banking total finance, economic growth tends to move by 0.008 units. And from the half squared, it shows that the model is perfectly fit, because it shows about 99% of the dependent variables variations is explained by the model. For causality test relationship, this value actually shows that there is no causal relationship between the Islamic public finance and economic growth in the country. And this may be because of the low number of Islamic banks that is available in Nigeria, actually. In conclusion, there are two major findings that have been summarized in this study. And one is
Well, I guess we have lost connection with Adebayo, Mohammad, or Ojuolape. So time for the next presentation. May I request Dr. Umar Farooq Saeed to present his paper on the role of women in developing the post-pandemic economy in the Muslim world. Dr. Muhammad Umar Farooq Saeed.
Thank you. Right. Bismillahirrahmanirrahim. First of all, thank you for the presenter. that I will learn so many things, which basically is not my field of interest, but basically that I have tried to learn a lots of things from this conference, and it is a great pleasure to be here. And my paper for presentation today is the role of women in developing the post-pandemic economy in the Muslim world. So basically, why this topic? Why this topic? This is a basic question that arrives, and in the abstract that I have answered this question. That basically, that if you see the world population, that we are the people who have almost identical, if not the women are a lot more, not so much more, but basically they are more. This is a kind of 52% at the stat states that they are 52% of the world population of 48% men. So why it has to be, second question, that why it has to be in the Muslim world, why not in the Western world, in the non-Muslim world? So basically, the role of women in the modern economy is exceedingly crucial that I find. Why? Because they are basically more than half of the population of the world. So their roles basically becomes crucial at to begin with. And on the other hand, so why in terms of economy and finance? Also because that they are the people, of course, they are human, they have their needs, and of course they have to fulfill their needs as well. Secondly, the third part, and the most important part that comes into mind, that why the Islamic world? Why is it important for the Islamic world, the Islamic finance or economy, to have their role in it as well? So basically, that we are the people, the Muslims, that we have a rich past. We have a very rich past that I have given the example in the abstract as well, that Khadija, may Allah be pleased with her, she used to be an investor for the Prophet, peace be upon him. That's a pre-Islamic era, and that continued after the Islamic time as well, in the Meccan era. And then the people, and also that I have given example, which will follow. So to introduce the topic, that I have taken out this thing in three phases. That the paper consists three phases: the past, the present, and the future. So for a Muslim to play a role, why it is important basically that the Western world, that they are always, the women in the Western world, they don't have to go through these things which the Muslim women go through. Because they have basically point one, that has to be clear, that it is allowed Islamically in Sharia that they have to perform and they have to play their parts and role, or can they do it or not? So this is the basic question, and that can only be answered through the past. And as I say, I'm going to present that the past that we have in the Muslim world, that was rich. And to basically give some examples, I have given some examples from the past, and these are the three most of the famous examples out of it. So after that, the paper moves on to the Islamic and Sharia, the rules and the rulings about that, is it allowed or not? So basically, that we find that this point and age that we are living in. So in pre-Islamic era, that I give the first example for Khadija radiallahu anha, that she used to be the investor. So that she used to be a businesswoman who would contribute in the economy of the society. So basically, that what gives us, this gives us an indication. Basically, but I'm talking about, my paper will not contain many terminologies, many difficult words for the layman to basically understand. It is for the society to understand this problem. So how will we understand that? So it is on a micro level, because people basically, most of the people, they don't even have the capital to invest. So there are solutions that they will go for microfinance. And then when they will go for it, they would need to start the process. They will need basically a point where they can be easy at that. They can be easy. So why? There is a hadith that I'm going to narrate, that the Prophet ﷺ, he encouraged women to do the philanthropic work, to give sadaqah and more, because they are in more need of it. Skipping the last part of the hadith, but then he encouraged the women to do that. So to give an example, for example, point one. So what do we find in the Islamic history about it? So Zubaydah bin Jafar was a woman very famous in the Islamic history. She belonged to the Banu Umayyah, and she was a wife of an emperor in Mecca as well. And she donated most of the money that she had to build a canal, which is still known as the Canal of Zubaydah, that is in Mecca. You can see that that's 20 kilometers long, and by still at that time, the people who would need to give water to their crops, and of course to do many other works. Of course, Mecca is a place where they don't find water very easily. So because of that, that work of a woman and her vision to do the work for the Muslim people that paid dividends. And till date, even that's been considered one of the landmarks for in terms of economy and finance, bringing many people more to Mecca and more business and more many things. And the second example, Fatima al-Fihri is another prominent Muslim from the history, and she was the one who laid the foundations of a university. Now it comes to academics. Nowadays we have PhDs in Islamic finance and in Islamic economics. That's a great thing. And what do we find from the history? Basically it was started from Al-Qarawiyyan University in Egypt, which is a part of the Jamiat al-Azhar now at the moment. And then we find that this was the part that was started by, and the land that was given for that university was a vision of a woman, Fatima al-Fihri. And this thing, they have been includingly, they have been contributing in every part. So why is it not happening now? Because maybe we don't know that. So basically that we have to do, and to quickly move to the third part, Rufayda al-Islamiyya. And she was the first nurse to perform a surgery. And this gives an indication from my field of interest as well, because I'm a physician. And if I tell you that this is the most intriguingly needed thing for us in this time and age, that we need that. We in our country that we don't have so many. We have many female medical graduates as well, but they do not practice after their completion. So we have this example, and she also, Rufayda al-Islamiyya, we also have basically a center for Islamic women in medical in KPK as well, which is named after her. So this is another example from the past to conclude this up and moving on quickly to the next part. That these example that I have given, that leads us to the present times, and this time and age that we follow, and we have a situation called a pandemic situation. That now that there are many things, there is a thing that, okay, all right, that we are in trouble, we indeed are. But we find this, we should find this as a blessing in disguise, that we find this place to be, and this situation to be a blessing in disguise for us. That for women in Islam, that you need to give them a special environment, a special place, which will, of course, will cost more capitals to be invested, of course, for giving them a more different environment and a segregated environment. But this pandemic situation has converted even many offices online, meaning many things have been converted online. So how to use it? It is basically the next question for the future. So this has to be done first. The right use of inheritance. That is one of the basic things. A capital which is dormant, that will not bring any good unless it is in circulation. So the women who keep their capitals dormant, that's the worst part that they do. And because they don't have to begin with, they don't have that, maybe the concept to invest it or to do something with it. So the right use of degrees, as I mentioned it before, that they has to be used, and building an appealing religious narrative. This is the most important part of the last part of the paper. That telling the takeaways, what can be that? To telling the message that it's not sinful for the women to work, and narrating authentic incidents and rulings from the Islamic history, that it is allowed, and send in enlightening that from the seerah of the Prophet ﷺ and the Sahabiyat as well, that this is a thing which has to be done. And also for the women to play their roles. Why is it important? That in current times, that if they play a part, and I have given a stat that the unemployment rate for females, the average value for Pakistan from 1991 to 2020 was 1.59%, and that as I tell you, that this is the framework that has to be presented in the last. Lots of things can be done: technical skills, online courses, freelancing, and also content writing and editing that can be done. Also, many technical presents. And
sorry for the interruption, Dr. Saab, we are running out of time.
All right. I'm almost done now. So this is a current pandemic situation, which leads us to this situation that has to be done, and also that we should give that build a narrative in order to give and present this situation more ideally towards the people. And this was the course of my paper, basically. Thank you for that, and back to the moderator.
Thank you very much, Dr. Umar Farooq Saeed. Now may I request Dr. Kaisar Bilal to present his paper, and he will be presenting on smart social inclusion in smart lockdown during COVID-19 in the light of Sharia. Dr. Kaisar Bilal.
Bismillahir Rahmanir Rahim. Nahmaduhu wa nusalli ala rasulihil kareem amma ba'd. As I have been repeatedly told by the host, the time is running out, so I have only 5 to 8 minutes. So I'll try my best to come with a conclusion. The crux of my paper, smart social inclusion and smart lockdown during COVID-19 in the light of Islamic modes of financing. The drives beyond this paper is actually some of the case studies that have been observed by me during COVID-19. Actually, those case studies based on some of the Sharia rulings that has a clear, explicitly has some of the orders that says, فَنَزِرَةٌ إِلَى مَيْسِرَةٍ أَيْ أُدْخُلُ فِي السِّلْمِ كَافَّةً. The Quranic verses, the Islamic Sharia says that enter into the Islam with entirely, with wholeheartedly, and don't follow the footsteps of the evils. So personally, there is a ruling in Islamic law that the Sharia rulings has been changed as per according to the situation, according to the situation, the Sharia rulings become some flexible and some has, you may call it, some lenient and relief to the customers, to the public, to the layman. Keeping in view that in COVID-19, we see a number of activities that has been done by the Islamic banks, so many cut and diets and installment deferment, so many things like that. But the thing is that what that is somehow most important for to give the relief to the layman, to the low average earners, not like that. Not even we see that as we had that there is some of lacking in social responsibility by the Islamic finance. So skipping some of the slides as the timing short, this paper is actually defining those determinants, solutions, and models of smart social inclusion to minimize the hard economic impact of COVID-19, along with portraying a clear sketch of it in the light of Sharia. We see that in smart social inclusion, there are 5 dimensions. If we go through the Sharia perspective and we follow in a true sense the Quranic guidelines, the Sharia and the Hadith, we will get a strengthened society at all. We see that the whole study such methodology based on analysis of different aspects of social standards and crises, along with popular scientific theories and its conceptual interpretations towards enriching human values and considering the contemporary submission in relation with Sharia standards and Islamic rulings to know the extent of compatibility, streamlining, and parallelism. For the said purpose, descriptive method to conduct this search is the most suitable methodology for that. Here I will quote one of the Quranic verse, Bismillah ar-Rahman ar-Rahim, Sanurihim ayatina fil afaqi wa fi anfusihim hatta yatabayyana lahum annahu al-haq wa lam yakfi bi rabbika annahu ala kulli shay'in shahid ala innahum fi miryatin min liqa'i rabbihim ala innahu bi kulli shay'in muhit. We will show them our signs to the horizons and within themselves until it becomes clear to them that it is the truth. Is it not enough that your Lord is a witness over everything? Surely they are in doubt about the meeting with your Lord. Surely he surrounds everything. So we see that in the light of that the COVID-19 is one of the examples that we see that was you may call it not a normal situation. So many Sharia rulings has been changed, and there is some of the flexibility and relief to the layman as well. You see, the Sharia Islamic law is a legal system that considers interest or expectations of all stakeholders in a very fine manner, but considers public or collective concerns, common orders, and social concerns preferred. The survival of business and protection of wealth is a Sharia requirement. In complying with the requirement of the protecting wealth, The classical literature witnessed that the Islamic jurists fuqaha discussed mechanism of mitigating risk of losses, misrepresentation, or product defect, or any kind of fraud leads to exploitation and misuse of wealth. The spirit of Sharia direction is to ensure the orders in the lives of individuals, specifically smoothness and communal activities, are highly preferred. This is the quotation of the Imam Ghazali rahmatullah alayh. ومقصود الشرع من الخلق خمسة وهو أن يحفظ عليهم دينهم ونفسهم وعقلهم ونسلهم ومالهم فكل ما يتضمن حفظ هذه الأصول الخمسة فهو مصلحة وكل ما يفوت هذه الأصول فهو مفسدة ودفعها مصلحة. المستشفى في علوم الأصول. The Sharia objectives regarding the creation is to protect their religion, selves, intellects, lineage, and their wealth, and whatever guarantees the preservation, protection of these five called masalih, and whatever causes for its spoilage called mafasid, and elimination of mafsad is also a maslaha. Why smart social inclusion? We see that inclusion is messy. It is about constant vigilance, constant negotiation, learning to deal with things we take for granted. It's not about bringing outsiders into the existing mainstream culture. It is about creating a new and negotiated culture together. A framework for understanding day-to-day issues within communities, organizations, and programs. Social inclusion is both a process and outcomes. Recognize it, identify that identity takes many forms. There are multiple dimensions of social inclusions. Social inclusions, as described, is the feelings of belonging, acceptance, and recognition, and it's intertwined with the issues of diversity, equality, opportunity, and democratic participation. Inclusiveness is linked with social health and quality of life, and this in turn is closely linked with economic prosperity. Some of the key elements on that building inclusive communities through social inclusion and civic engagement. I say understanding that all members of the community potentially gain, everyone can participate as a valued and contributing member. An inclusive community or city is one of that provides opportunity for the optimal development of all children, youth, and adults. Here is some of the factors that how the people, what are some of the mechanisms that comes out the people from the mainstream of the culture. We call it social exclusion. That is poverty and ill health and discrimination, race, gender, lack of education, jobs, etc. are some of these factors that play a very intensive role in that disturbing the smoothness of the society. So here is another thing that is so important. The Islamic finance should emphasize on. We see that financial inclusion.
Excuse me, can I interrupt? Can I interrupt?
Yes. Yes.
Assalamu alaikum. We have very short of time because even I cannot conclude the brief summary or your research papers and cannot talk about the research paper.
Okay, sir, I will come with the conclusion only, and just only 1 minute, 2 minutes more, please. We see in Islamic finance should emphasis on that is financial inclusion that is used as vehicle for social inclusion. What are the main key factors on that? Commitment to diversity, opportunities for human development, equality of civic engagement, cohesiveness of living conditions, advocacy of community services. I will just go at the last, some of the way forwarded. The way forward for Islamic financial services industry ought to focus on development of middle class and low earners through entrepreneur opportunities, because if they focus on the entrepreneurship and create number of opportunities for the layman, for the low earners, automatically they will get the chain will be go through to them as well, to the Islamic finance. The fruit of Islamic financial services industry will only be accomplished through streamlining with the spirit of Sharia standards, emphasis on smart social inclusion driven by Quranic teaching and rulings, a need to get attention and government will for complete transformation and execution of Islamic finance, not only Islamic financial services industry, but all walks of life should be in conformity with Sharia standards. If we follow the Sharia standards in true spirit and true sense, and follow the Sharia rulings, inshallah ta'ala, we will get some of the smoothness, especially in the severe situation like pandemic 19, we have a flexible Sharia rulings, فَنَظِرَةٌ إِلَى مَيْسَرَةٍ وَنُدْخُلُ فِي السِّلْمِ كَافَةً. Inshallah, we will get the fruits and the pleasant consequences and outcomes of that, inshallah.
Thank you very much, Brother Bilal. May I now request over the session chair, Mr. Muhammad Islam Ahmed Saab, to please bless us with his expert comments and also conclude the session. Mr. Muhammad Islam Ahmed Saab.
Jazakallah khairan kasiran, Umair. Assalamu alaikum wa rahmatullahi wa barakatuh. Distinguished guests, speakers, authors, ladies and gentlemen. Assalamu alaikum wa rahmatullahi wa barakatuh. It gives me immense pleasure to join today at the 4th World Islamic Economics and Finance Conference 2021, being organized by the Minhaj University Lahore through online. I would like to convey my sincere appreciation to the organizer for conducting this conference on the most important topic in this COVID scenario. I would also like to appreciate the researchers and authors for the high and highly appreciated research papers. And it is also honor for me to choose as a chairperson for this session. First of all, I would like to summarize some and what in all the paper regarding the social inclusion or financial inclusion, what steps by State Bank have been taken for the COVID period and after it effects. First of all, I would like to talk about the first paper. That is a nice paper presented by the Khalilullah Mohammed regarding the bank capital channel of monetary policy. It is an interesting study of various countries aimed to provide insights to the policy makers from the perspective of the monetary policy transmission effectiveness. This author mainly, I think Khalilullah Mohammed talks about the bank lending financing is impacted by capital adequacy requirements, and its decrease if bank capital falls close to this limit. The Islamic banking, and the other thing is the Islamic banking function is very similar to the conventional bank. That is Cost Plus Islamic Banking Products Act, just like a debt instrument when studied in the different model across the Asia. However, in this regard, it is my recommendation is that because he did not consider the risk-weighted assets and the participatory mode of financing regarding musharka, diminishing musharka, I recommend that besides considering CAR requirements under Basel, IFSB standards regarding the capital adequacy. That is, last version was IFSB 15, and I think IFSB is working to revise this standard. May also be consulted for better understanding of the intrinsic differences in lending and financing functions and capital adequacy determination of the both banking regime, that is conventional and the Islamic. Because Islamic banking may prone to additional capital requirement due to few peculiar risk, particularly due to Sharia non-compliant risk as an operational risk. On the other hand, as per CAR standardized formula given in the IFSB 15, there is no capital requirement against the risk-weighted asset financed through investment account holders, which based on the participatory mode, mudarba based, or that might be on musharka based, and those are on risk and reward, and because risk and reward borne by them, all the business risks that is related to the market risk or credit risk are borne by those investment account holders. And I think Malaysia is adopted. Secondly, the second paper was about the smart social inclusion in a smart lockdown during COVID-19. That is also a very excellent paper presented by the Dr. Kaisar Bilal and about it, I want to talk about the SBP, that is financial inclusion is the amongst SBP strategic goals to promote promotion and development of Islamic banking as a part of these goals. The proposed research is likely to broaden the horizon of the financial inclusion to the next level of social inclusion in a smart manner by using Islamic finance as a vehicle to promote social inclusion. The rapid growth and momentum of Islamic finance in both Islamic and non-Islamic jurisdictions, comprising of almost more than, I think, 80 countries, loudly speaks about global acceptability and recognition of Islamic finance. Innovation of Islamic finance, innovation, business intelligence, and digitalization are the keywords to overcome the post-COVID financial crisis. The paper regarding the nexus between Islamic public finance and economic development, well presented by brother Adebayo Mohammad. The research is very challenging as it is likely to prove consistent findings of the established studies in similar domain. However, the outcome of new research will no doubt provide a guidance and assistance to the government of Nigeria for promoting Islamic public finance as a vehicle for its economic development, and also as tool to fight against poverty in Nigeria and to develop a human development index as well. The major initiative taken to handle the COVID-19 economic challenges in various countries could be a role model for growth of economy in Nigeria in post-pandemic scenarios. The research may also like to study the relationship of Islamic private or non-public finance with economic development for a more meaningful research. The foremost advantage to the researcher is the existence of rich-related literature and the ample established studies. The paper presented regarding the role of women in developing the post-pandemic economic in the Muslim. I am summarizing this lastly because the State Bank do a lot of things regarding the women's role of women in the economic growth and financial sector. In this paper, basically, I think Dr. Saab tried to define the important role of women and the possible ways that how women can grow the nation's economy. Dr. Saab also suggests that the benefiting ways use dormant capital that women acquire through inheritance. It also highlights that in Pakistan, women don't make use of their degrees effectively. As a whole, there seems to be some problems in ideology of women, that they are busy in non-constructive works, and as a result turn out to be unproductive for the society. Because of the very reason, there have not been big women figures noticed in the current world, at least in the field of science and finance. To address this, to actually revive our post-pandemic economy, women are encouraged to acquire technical skills through online courses, learn freelancing, content writing and editing, along with learning to sell or do business through. I would like to add that in some research I read that the women on the 17th annual power list held from 30 countries and were born across our generations. There are 10 heads of state, 38 CEOs, and 5 entertainers among the women. The best example is the world's youngest head of government, Finland Prime Minister, Sanna Marin, who put in place decisive measures to limit the spread of the virus, along with the New Zealand lady, Jacinda Ardern, whose swift lockdown successfully eliminated the virus in both first and second waves. We can see also the example of the Taiwan president, Tsai Ing-wen, implemented a rigorous contact tracing program in January. As a result, to date, the Iceland of 23 million people has lost of only 7 people to the virus, to this virus. And to the SBP upfront has decided to unveil policy on the gender equality in the financial inclusion. I will take 2 or 3 minutes, Umair. It's all right. I will take 2 minutes. Umair,
Sir,
can you hear me?
1 minute, sir.
1 minute.
Yeah.
Okay. The State Bank unveil policy to gender equality, and we are introducing a policy regarding the induction of women in the financial institutions and the economy. Financial institution shall be asked to develop their policies to improve gender diversity and ensure minimum 20% female participation in the foremost in the workforce by 2023. State Bank also required to set up a policy forum on gender and finance to discuss opportunities and challenges in the women in financial inclusion. Lastly, I would like to thank all of you, and I pray for the success of this event. And inshallah, I feel proud to provide any assistant guidance with respect to all of above studies or in researches. We shall also have to continue to play my role with diligence and innovation, and being a regulator in 2020, Pakistan with its inshallah proactive economics measure will inshallah be able to tackle these challenges as well. May Allah subhanahu wa ta'ala keep all of us, our beloved country and whole human beings in the world safe and end the pandemic. Wa akhiru da'wana alhamdulillah rabbil alameen. As-salatu was-salamu alayka ya Rasulullah.
Well, thank you very much, sir. Ladies and gentlemen, it was Mr. Mohammed Islam Ahmed sir who was giving his concluding remarks and expert comments on the papers which were presented in this session.